We are often interested in knowing whether exchange rates favor one country over another. We're going to do this with a specific question. Have recent trade exchange rate changes favored U.S. or Brazil in trade with Europe? Here's our graph, which we've seen before, and let's make this question more specific. Specifically, what we're going to look at is between January 14th and December 2014, the year, and use this above data to see whether or not Europe or U.S. is favored in trade with Europe. All right, I'm going to blow that table up. Here it is. Take out these numbers because we don't need those numbers, and honestly, we don't need this number either. So we're just looking at U.S. dollar to Brazil, U.S. dollar to Europe. Here is the exchange rate. U.S. dollar to Europe, 0.735 on January 14th. Here it is, 0.90. Here's Brasilia to Europe, and we calculated those. We can calculate those from this data here, and if you need to know how to do that, look at the previous modules. And so there's 0.39, 0.231. You can see already that Europe or U.S. is a relative disadvantage based on these exchange rates. U.S. dollar now will cost Europeans more for U.S. goods, Brazil less. All right, one of the ways that we may be or characterize that is by looking at the ratio between the two. So we could look at U.S. dollar Europe, Brazil Europe, see the relationship between those two on this date and those two on this date. I did that here, did that calculation. So this is U.S. dollar Europe exchange rate divided by this. It's 2.382 times. That has widened to 3.90. So we know relative to one another that U.S. dollar has become less favorable compared to Brazilian goods going to Europe. Look at those two numbers, though, and you'll note that it is simply U.S. dollar Brazilian currency exchange, and that's strengthened, and that would mean that the strengthening of U.S. currency relative to Brazil caused U.S. exports to be more costly in Europe than, let me just add a little bit here, than Brazilian goods. So, if we were exporting soybeans and nothing else changed between 14 and 19, U.S. now has a disadvantage based on changes in exchange rates. One other thing, note that this is the exchange rate, and one further note, just one further note. It's the same for all countries. That number is not going to vary whether we do it between Europe, Canada, China. You can look at and see what exchange rates say about trade between one country and the other simply by looking at the exchange rate pair for which you're interested.